And we're going to jump over, as we always do, folks. Wednesdays, 40 past the hour, we're going to talk to our man Teddy Kekstadt. If you haven't checked out the outstanding Tiger Forex Report Teddy puts out weekly, you get a webinar in there as well. It comes with a 30-day money-back guarantee, folks, so you can't go wrong. Check that out. And don't forget, under the Services tab, a couple of great webinars, Capitalizing on Time with Calendar Stock Option Spreads and Japanese Candlestick Pattern Stock and Option Strategies with our man Teddy Kekstadt. Check him out. Teddy Kekstadt, good morning.
Good morning.
Where do you want to kick it off, Teddy? We got a little bit of private payrolls this morning. The market shakes it off. We're actually a little higher, but yields moving a little bit, the dollar moving a little bit. What do you think about this market?
Yeah, I think it's exactly what you just said there. The dollar's moving a little bit and yields are moving a little bit.
And the market shakes it off like it's nothing, man. It's like remarkable. Right. Yeah.
Yeah, I think it's going to be, until the Fed meeting in 2 weeks, I think it's going to be very, very sideways. So, I mean, you got to remember that now we're already at the half point of the year. So, and as far as, if the Fed does not give us a cut, in 2 weeks from now, there's another meeting at the end of July, and then the next one isn't until the middle of September. So we're kind of, there's only so many Fed meetings left. If they don't pull the trigger, at this next meeting, or especially in July, well, then we know we should be due for 2 rate cuts, probably, between the September and the last meeting of the year. So right now, the question is, are they going to pull the trigger or are they not? And I think until they will, we're range bound. And right now, I really don't see we're going to have much action at all. I mean, we made a nice little move, kind of on Monday. It got reversed on Tuesday. And now today we're in a, kind of a just set adrift. So, and I think that you have to be very careful with your expectations as far as any real trend moves, if you will. For as far as follow through, so I think that's where we have to be, just cognizant until, 2 weeks from today when at 1:15 or, when the Fed does or does not make their decision.
And then when you go forward from there, because the Fed is in focus, they're in focus today. The president's got them in focus, Mr. Powell. Do you have expectations right now as a currency trader when you're watching and you put out some great charts of many of these currencies, and we can dig into the pairs, but are you kind of just waiting for a momentum change there if you're looking, or do you have any indications of what you're exactly looking for, or are you waiting to see kind of where the trend shakes out?
That's a great question, Tommy. Actually, you know what? I do have a plan. So there's obviously one of two things that's going to happen. Either the Fed does cut or they do not cut. So let's just say that Powell doesn't cut, right? So in that case, the sideways trade will end until the July, for at least a couple of weeks. Most likely you'll see, yields go up. You'll probably see the dollar get some strength in the short run, for probably like 2 weeks. So I would say that if there's no cut 2 weeks from today, starting either that afternoon or the following sometime between that afternoon and Thursday afternoon, you'll see the dollar and the yields start to tick up for at least a week or so, going into the end of the month and ending the second quarter. And then at the end of the second quarter, as we go into the holiday market for July 4th and that time, and then you go into the meeting at the end of the month, we'll probably settle into sideways, choppy. A lot of people might say it's summertime markets. This is not a summertime market situation. This is really a Fed, based, I think, environment that we're kind of looming in, if you will. But we've been talking about this, that we're kind of in this range trade zone right now for all of these markets. There's no real reason to define any new trend move, whether it be bullish or bearish, whether the market's going to break and start making new lows, or if we're going to get a rally and start making new highs. These things are really kind of, there's no reason to do one or the other, is basically what I'm saying, if that makes any sense,
Yes, no, so, I hear you.
And I think that's really that's just the markets we're living in right now. It's not like, there's times when the overall, like, you can start a trend, like, say, like this month, and you're like, okay, so now this market, like the euro US dollar, is going to be bullish most likely for the next 6 months, and in case that's when you look at any correction as just that, a correction, in that kind of a mode. We don't have anything to define that, whether it's any of the currencies or even the interest rate markets, So I think the biggest thing would be to watch the shorter term yields, the 1, 2, and 5 year, to see if we can get it. If you can get a reaction in those markets and really start to catch a big move on a daily basis, expanding their range, then I think you might start to see a pop in the 10-year and the 30-year. But I don't see that really happening right now. There's nothing for at least fundamentally. There's nothing for the next week and a half that should stir that. I mean, granted, we have a couple numbers that come out. If they somehow really come way out of whack, then of course I could see a knee-jerk reaction. But unless that happens, I honestly don't see anything. I hate to say it, we're just in a sideways market.
Yeah, and I can I appreciate the take as always, man. Some great information. I know, not putting you on the spot, but saying what if this, what if that, right? That's kind of the way that I look at the market as well. Just looking down the line a little bit, trying to figure out possible scenarios and how you approach them. Because I find myself, if I don't go too far out trying to make grand predictions, and I take things not as they come, but to a certain degree, right? All right, if this is going to happen, and looking at the possible ways that could play out. What do you think about crude, Teddy? We're pushing. I was just looking at the chart, and it's remarkable, man. I go back to crude. I mean, we're at 63, 68 right now. We've been a little bit higher, but really that market around the April trade lower, I can't believe that's, as you said, time is flying. That's April 4th. So we're approaching the higher part of this trading range since you really ratcheted down on April 4th. We're at 63.70. What do you think about that crude market?
I think it's going to be sideways too. I think there's definitely some upward bias right now. But I think, like I said, I don't see any real follow through. I think we can make new highs. Monday we tried to break out to the upside. Yesterday we tested the highs again. Today we're floating right below it from the high from like a week and a half ago. Yeah. If we get above that, maybe we get. I mean, if we hit 67. 70, I think, would be the high that oil could spike up to. But if it goes up there, then I see it being where the market goes up, and it's literally going to fall right back off of it. It's not. Yeah. I don't think it's sustainable by any means whatsoever. So now here is the one thing is maybe because there's option and futures expiration and the second quarter ending. Maybe that would, depending on the positions, could give us an upward bias going into the end of the month, or at least until maybe the next week or so. And then once again, if the Fed doesn't cut, then that's also gives not necessarily bullish support, but it doesn't give the market a reason to sell off, if you will, for crude. So, but I like it where it's at. I think, that would be the highest spike, but I could see it falling back a few bucks also over the next week or so. I mean, it's just a chop right now. I'd be very careful on a daily basis.
And the market's chopping. This market chopping is pretty remarkable. I'm sitting here watching the prices tick around that 6,000 price point. Teddy, man, some great information. I appreciate it. Folks, check out the Tiger Forex Report. And don't forget about those outstanding webinars under the Services tab, talking about candles, talking about options, some great stuff. Teddy, man, I appreciate it. Hey, we got the Stanley Cup Finals starting tonight, man.
Yes, we do.
All right, I'll talk to you next week, Teddy. Have a great one, man.
Take care.
Take care.